Good afternoon, everyone, and welcome to our first panel discussion of the day. My name is Sergi Lanau. I'm Deputy Chief Economist here at the IIF, and we want to make this first discussion of the day in a panel about the policy response to this really big shock the global economy is experiencing, and obviously Europe is no exception. Just as a small aside, the event is on the record and there is press in the audience. And as in previous sessions, if you have questions, put them in through the chat function at the bottom, and I'll get them and I can ask them to our speakers. So let me introduce briefly our speakers today. We have Jörg Kremer, Chief Economist at Commerzbank. Jörg has a lot of experience in Europe, in asset management, in banking, and I think he's going to give us a really interesting views from a bank, a group of people who are serving households and companies that are dealing day to day with the impact of this big shock. So I think it's quite a unique perspective. And then we also have online Ángel Ubide, Managing Director and Head of Economic Research for Global Fixed Income at Citadel. Ángel has a lot of experience in markets and is also very active in the policy debate on what should be done in Europe. So anytime Ángel writes, he makes you think. So it's very good, especially in an area where there's been so much discussion over the years that sometimes it's not that easy to find a new angle to things. So let's jump into the discussion. So perfect. That's great timing, Agnes. So let me introduce our final speaker of the day. Apologies for the slight delay. We had a small technical issue here. So Agnes Pelage, she's a Chief Europe Strategist at Barings. She also has a lot of experience in Europe. And actually, she was one of the people setting up the ESM years ago. So she knows what it's like to do it like for real. So it's great to have her here. So as I was saying, let's jump into the discussion. And I would like to start briefly by discussing the nature of the shock, right? Because this is not your typical financial crisis. It's not your typical bubble that pops. It's nothing we have seen like ever really. So Jörg, I wanted to start with you in terms of what do you think makes this shock, this crisis different? What should our audience be thinking in terms of this animal we are dealing with?
Yeah, well, the majority of past recessions were caused by demand shocks. That means by the burst of an equity bubble 20 years ago, or the burst of a dead real estate bubble 10 years ago. And this burst of the bubbles caused companies and households to save more, not to invest, not to consume. That means this was a kind of demand shock. This time, however, the recession started as a supply shock. Over the time, it has also developed into a demand shock, but originally it started as a supply shock. Perhaps this is the first supply shock-induced recession since the 1973 oil price shock, but nevertheless, it's quite unique. And the second difference is that this corona-induced recession is much deeper than all the recessions we have seen before since the end of the Second World War. Think of the great financial crisis 10 years ago. Now, if I look at the unemployment data in the States, for example, now you are at roughly 15% unemployment rate. And we have not seen the peak, whereas after the burst of after Lehman bankruptcy, the peak was a 10% unemployment rate. This tells you a lot about this the size of the recession, which is without any example in post-war, post-Second World War history. And I think these are the main differences in my view.
All right, perfect. Thank you, Jörg. Angel, Jörg mentioned a few times this started as a supply shock, which is a distinction that matters a lot for the inflation side of things, which is already a very active debate. And a bit like in 2008, people are debating if this is going to cause inflation or deflation. Where do you see things going given the nature of the shock? And are there tail risk scenarios where you would get the opposite of your baseline, or is it clearly one way?
So the way I like to describe this is really not a recession, right? It's a sort of an induced economic coma. Because normally when you think about recessions, there is an imbalance, the imbalance pops, and then when the economy comes out on the other side, it's a bit different because it was clearly not sustainable before the popping of the imbalance. This is different. The economy was perfectly fine, at the end of last year, and then we have to put it to sleep. And so the key to what happens after that really depends on the policy response, right? If the policy response is the adequate, then when the economy wakes up, there are no changes really to the economy. And then the trends that were in place at the last quarter of last year should continue to be there. And those are trends of low and steady inflation, for example. So it is still endogenous to what we do. And I think the jury is still out. If I had to choose today, I would side with those who think that, if anything, this is going to reinforce the disinflationary trends, because risk aversion and precautionary savings are going to stay there for at least another couple of years until we know for sure that the virus has been eradicated. But again, there is still a lot of work to do, and things can go the wrong way if the policy responses are not the right ones.
Right, perfect. Thank you, Angel. And we'll definitely go back to the inflation side of things when we discuss ECB policy. Agnes, one more general question before we jump into policy responses in themselves. So there are countries going into this in better and worse positions. It's not the same, obviously, to be Argentina or to be the US. These are quite extreme examples. But if we start focusing a bit more on Europe, how would you describe the starting conditions, where the economy was when, as Angel says, it was put to sleep quite radically a few months ago?
Well, hi, everybody. I actually agree with Angel. The European economy was in a pretty good place when the health crisis hit. Unemployment was at its lowest level since 2009. In many member states, wage growth was the highest it had been in many years. The monetary union had put its macro imbalances to rest, at least in terms of flows. Current accounts were in surpluses in most countries, and governments had put their fiscal houses in order. The euro area-wide fiscal deficit was just 0.5 point of GDP, and there was no excessive deficit procedure for any country since 2002. On the growth side, manufacturing production was growing at a really fast pace, and investment had been highest in the past 5 years preceding this crisis than it had been in the 5 years preceding the great financial crisis. Corporates were also at a very low leverage, probably the lowest they had since the introduction of the euro, and banks had very strong balance sheets, of course, a consequence of the great financial crisis, but their Tier 1 capital ratio was at 15%, which is very comfortable. And the liquidity coverage ratio was covering 1.5 times their short-term liabilities. So the situation was relatively good. Of course, not everything was perfect. The growth was subdued, a result of global productivity slowdown, and governments were handicapped by very high debt levels. which also, of course, makes a European policy-wide response worthwhile and important.
Perfect. Thank you, Agnes. So I think this was very useful by way of setting the stage, since, as you all agree, it's not really your typical recession in any way. So let's start moving a bit into the policy response. And I thought that instead of discussing immediately what Europe can do and how we can make common recovery funds work, I wanted to take a step back, and I will ask each of you for a policy response you've seen, be it in Europe or somewhere else in the world, that you think was well tailored to the situation. And that could be either the overall response, or if you want to pick on a very specific thing, like, so this country did a lockdown in a certain way that works. That would also be good. So, Angel, let me start with you. What caught your attention in this long list of policy responses we've seen everywhere, basically?
So, the way I think about this, I'm going back to the way I was framing it, that we put the economy to sleep and we wanted to wake up basically without damage. It's the issue of we want to avoid hysteresis, right? So we want people to go home. We want people not to work, not to consume. We want companies to shut down, but we want them to be able to reopen. And so the policies that have been put in place out there of wage subsidies and income replacement and liquidity for the small and medium companies are key, because essentially they are providing the lifeline for these sectors of the economy to survive during this period. And that was really, I think, it was innovative. At the beginning, there was a lot of hesitancy because of the perceived economic impact in the budget and in the deficit and in debt levels, but it's the right thing. I mean, the more of this fiscal effort is done now, the less permanent impact there is going to be in the economy, and therefore the less damage to the fiscal outlook in those countries. So the more aggressive countries have been with this kind of policies of income replacement and wage subsidies and the rest, the better. And there are very good examples out there.
And Angel, just a quick follow-up question. Do you think this should be very unconditional, that the shock is such that, at least for some time, you just really don't consider is the company solvent? Because I remember back a few years ago in the euro area, there was a big question, right? Are you supporting something that companies that are not viable and you should use this really scarce resources somewhere else? Or is it now so bad in the beginning that you simply do it?
So initially, yes, right, again, and that's what I think the framing is important. There is no moral hazard here. Nobody's at fault. This virus showed up and nobody was really at fault of this. So initially, this has to be unconditional. And a priori, there are no sectors that were viable in December of this year that are not going to be viable in January of next year. Of course, again, it depends on how this process is managed, how long it takes, and how many things break along the way. But I would say initially, yes, it should be to a very large extent unconditional. It doesn't have to replace 100% of the income, but it has to replace a substantial amount so that firms and households can survive.
Perfect. Thank you, Angel. Jörg, turning to you, what do you think has worked, and what caught your attention?
You mean positively or in terms of?
I would say in terms of the policy responses you've seen around the world, something that you thought was effective and it was the right response, be it as the overall package or a certain intervention that you think was straight to the point. It's the thing to do.
Well, I have seen a lot of good things on the national level. For example, the short-time working schemes.
Yeah.
I think this is very, effective and set the right incentives for firms not to fire their people, but to stick with their stuff. And we know from the great financial crisis here in Germany that even here we were surprised by how effective it was. Of course, together with other schemes like a privately run working time schemes, but this short-time working scheme in Germany 10 years ago led to a situation where firms did not lower the number of employees, but did lower the numbers of hours worked. This is positively. Where I'm a bit of critical is the planned 500 billion so-called recovery fund of the European Union, because it's unclear to me which target they especially have. What is the underlying problem the 500 billion euros should address? And I think this could further develop or cause the Eurozone to develop away from a Maastricht Treaty-inspired monetary union to what I call a transfer union. That means, to sum up, I have seen a lot of positive things happening, which are important and help the firms and the economy and the people to overcome the Corona crisis. But I worry a bit that the Corona crisis is also used to change the fundamental architecture of the currency union in a way that will make it not more resilient in the long run, not in the short term, but in the long run.
Perfect. You raise many points I want to definitely get to, and we'll definitely have a lot of discussion. I think it's the question of the conference, right? Like where a recovery fund goes, what it does, what it does not. Agnes, you wanted to say something here?
Yeah, we're going to talk about the European Recovery Fund, but I think in terms of national effective humbling measures, there were quite a few. And for me, there are three types that stuck to mind. The first one is the one that really comes from the deepest of our heart, which is, the measures that government took very early to provide cash bonuses to those that had to work during the lockdown. I think Italy was the first country to declare so. And, for all the 8 p.m. hand clapping, I think the cash bonuses is really where you put money where your mouth or where your hands are. So that was really good. In terms of really more effective and sizable measures, of course, I think I really appreciated the fact that governments understood the nature of the fabric of the European economy in the sense that it's made by micro enterprises and SMEs, and it targeted a lot of its measures to that segment of the sector. There are examples in Spain where the government gave microloans at 0% interest rate and with a long maturities to these very small micro entrepreneurs. In France, the Solidarity Fund gave just a lump sum payment with just having to prove that you were viable in the past 3 years and you received a lump sum payment. And then the third thing, and there are of course other examples, but the third thing that I also liked, of course, is that you could have a lot of really good intentions, but there were red tape and bureaucracy that came in the way. And of course, in avoiding those, Germany is always the role model and did really well, and everybody knows about that. But not just because I'm French, but the French played a little bit with that in a really interesting way. They actually preempted the red tape by telling their own administration that if they didn't reply to a request for funding, an eligible request for funding, presumably within 48 hours, then the request had to be automatically approved and the funds disbursed. I thought that was quite smart. So I think in this immediate policy response, SMEs must have felt that governments had their back.
Perfect. So I think you all agree that the income support component in the near term is a very important one. I think we can already see that the big question here is, what do we do next if anything, and how the proposal to have a European recovery fund fits into the future of the region and the recovery and a bunch of things. This time around, I think the amounts on the table are significant, right? It's about 3% of GDP. So we're definitely not talking about a smallish proposal that may cause discussion, but end of the day, is not that big. This time around, it is an important thing. So let's have a discussion, and feel free to answer my questions in a broad sense. If you want to go in a slightly different direction and address each other's remarks, please do so. I know it's not easy when we are all sitting at home, but I think the topic is conducive to doing that. So let's try. And let me start with Agnes. And I wanted to ask you, so assume this goes ahead and you can recommend to policymakers what should it look like now, right? Time is of essence. So we don't really have many years to discuss this thing. It would be good to roll it out soonish. What are the first few things that need to be done, right? If we are going to do something jointly.
Well, so you're asking this question one day before the European Commission puts their own proposal on the table. And I'm sure they put a good chunk of their 30,000 plus staff on the topic. And I'm sure the cream of the cream on top of that. So I won't humbly compete with their expertise. But I think I'm quite personally happy as an economist, of course, that the EC is in charge of disbursing these grants. It will be allocated from one single place, and they can keep the receipts, and they can be held accountable for their action later down the road. And second, they for having worked very closely with them, they are really good at engaging with governments on the European semester and trying to figure out what are their budget needs compared to their reform needs, which are also costly. And so therefore they could allocate in a coherent way compared to government's needs. And of course, last but not least, they manage an incredible number of funds. I mean, it's a maze of funds. They have cohesion funds that invest in R&D and education. They have a solidarity fund that actually invests in provide repair funds for natural disasters. They have an agriculture and fishery fund. They have actually a just transition fund for the green transition. They have a number of social funds, youth employment funds. I mean, they definitely have a huge number of projects that they could pick from, in particular, if they had realized that there was a welcome grant part to this spending. For example, the green transition, we know that the return to green investment follows a J curve, in the sense that at the start it's very costly for firms to internalize the right investment and the unpriced benefits from this greening of their processes. These could benefit from grants. There is something else that, of course, the Franco-German proposal shows, is that they want to invest in health. So I could see definitely a central health system that would coordinate drugs and medicine and equipment and finance the relocation of strategic supply chains in that area. They also say that they wanted to have to finance the most impacted sectors and regions in the European Union, and they said at the same time that they wouldn't mind having a vision for the longer term where they developed European champions. And I think these two objectives go along quite well, where you could think of figuring out which are the European champions you want to support and then allocate funding to that.
Okay, perfect. I'll certainly go back to you. I want to draw you out on some of the points you made. But let me first make sure that each of you make your kind of opening remarks on this front, and then I'll keep going back to each of you. So, Jörg, turning to you, I guess on one side, your view on what this fund could do soon? And then also, what do you think, does it need to evolve into something else? Is it a good tool? Should we use it to build more of a union? Should we be looking elsewhere? What are your thoughts in a broad sense?
Well, perhaps I'm a bit old-fashioned, but I think one has to. I think we need guidelines how to organize states or institutions such as the European Union. That means we have different levels. We have municipalities, we have regions, we have national states, and we have the European Union. And I think you need good reasons to centralize tasks. That means normally you should start with the municipalities, then with the regions, then with the governments, and only if you have very good reasons, very good arguments, only then something should be done on the European level. Something should be done on the European level only if the national states or the regions can't do it better. And when it comes to spend for health, for healthcare systems, etc., I do not understand why all these things which were listed by the panelists before, why all this necessarily needs to be done on a European level. Don't we fall into a trap of over centralization? Something, too much centralization, and this is my worry. And the second worry is, we were promised by politicians over the past 20 years, if something was done, for example, in support of Greece, etc. No, this is one-time measures, etc., etc. But I tell you what, if the majority of the European Union countries prevail over Austria, Netherlands, Denmark, Sweden, I think then this Corona Recovery Fund, in the end, will not be an exercise which is limited in terms of time. This will, in my view, then become a permanent institution. And with the European Union being able to borrow and to run deficits, my fear is that then we get more and more centralization, which over the time causes a lot of resistance with the people, and therefore I'm quite cautious.
Okay, perfect. Thank you, Jörg. As with Agnes, I'm going to hold back my questions so Angel can speak first, but I'm making my list for each of you, so don't worry. So, Angel, what are your thoughts? Where do you see things going? What should they be versus what you think can be done? I know you must have lots of thoughts here, so please go ahead.
So a couple of things, and I'm going to disagree with Jörg a bit, at least on the framing, and I think the framing is important, right? The first one is, the first principle has to be that the response to this crisis does not increase the economic disparities in the euro area, right? The European Union as a whole, but specifically in the euro area. And the second principle has to be that this is about the right policy stance, the right policy mix, and not about helping a country here or there. And so when we think about the European Recovery Fund, I like to think about this is going to set the right policy mix, the right fiscal policy stance for the next 3, 4, 5 years. Because let's not forget, we are going to start from a very big output gap and from a very low level of inflation. And so this is going to be a question of defining finally, and it's a good step in the right direction in terms of centralization, which is to finally be able to have a European fiscal policy stance. That's the first point. And then the second point is there is a list of projects. This is basically a multi-year public investment program which is what we need, right, in order to fill the output gap over the next few years. And it's going to go into the areas of health and digital and green and all those things. And the projects are going to be defined at the national level, which is okay, but there are externalities and there are positive externalities for all the Euro area member states, and therefore it should be financed at the European level. So in some sense, I think it's exactly the right design. This is a common problem, it's going to have a common solution, and I think it's exactly the move in the right direction. But I would stress the point, this is not to help specific countries. This is to set the policy mix in the right position.
Perfect. So let me bring in a question from the audience, and I'll add to it from my side. So the question's basically saying, how can we roll out a recovery fund that is effective and yet does not create permanent transfer mechanisms? And then my other question is, so this is a very broad area. So there's a way of doing things where you have transfers. There's another way of doing it where you go many steps ahead and you have a fiscal union and there's something you start taxing jointly. So is it a permanent transfer? No, in this case, it's like a federal government, but it's easier said than done. But I wanted to ask each of you, like taking the question from the audience and what and mine on, well, there are ways to make it not transfers, but they're like really big changes. And I don't know if they're feasible, people want them. Agnes, how do you see this more big picture question on, is this transfers, is this a common tax base, what is it?
So I'm going to take again what Angel was starting with, which is that this was like a war. Would we think about not making transfers if you had people dying in a war? I think this question is a little bit misplaced, at least for some uses of the grant money. And when I was talking about health center commando at the European level, we have seen that some countries had tests, some didn't have tests, some had apps to track, some didn't. They couldn't open at the same time. The risks of having a second wave, even though they seem diminished now, are not the same faced by all countries. So I have zero issue whatsoever with transfers for health, for the well-being of the population in the European Union. In terms of other uses of the fund, as I was alluding to before, there are parts of the investment curve that actually is very costly for the private sector to take. And I was talking about the green transition, for example. This is a very long-term vision, and an investment in that area should not be seen as a bailout and a transfer, but actually an investment in the future. And if you have something that is too costly for the government to take over, the government is well placed to finance that part of the investment and then let it for banks to finance a much more profitable and viable long-term project. And this is how investments work in impact finance, for example, where there is a very strong public-private partnership in there. And then if we want, as you were asking me directly, to make this instrument more sustainable in the longer run, indeed, there are talks, and they have been quite explicit about transferring part of some tax receipts to financing this common, fiscal policy. And if the will is there, I don't see why, it couldn't be well managed. The will to have good governance in public policy and doesn't stop at the municipal or local or national level. It should affect all the level. And there is a European Court of Auditors. And I was saying that if there is spending, if they are coordinated at the central level but dispersed at the local level, and in that I agree with the org, they can definitely use all the levels of government. If there is a tracing through receipts being kept, then there can be an audit of the performance of this fiscal policy, and of course retaliation if that's not well done, and corrections and revisions to the program.
What are your thoughts on the question from the audience? And also on the issue of, is there anything we want to truly centralize through common taxation. And I have to say here that your point on centralization, I think I can relate a lot to it. I think so does Angel, because Spain, even before you go to the level of the European Union, is a country where centralization or lack of has been a huge political issue. So I mean, your point is really, really important at all levels, and just won't go away even if some people want it to. So very, very good one. But Jörg, the floor is yours.
Yeah, well, put it this way. I think the discussion is good insofar as we start to understand how many questions or underlying questions are raised by the issue of a recovery fund. You know, if you were to go to a kind of permanent recovery fund or a permanent instrument to support countries which are hit by shocks, etc., you can of course do this on a European level, and you can of course introduce European Union taxes and grant the European Union the right to borrow money on the capital markets on a permanent basis. You can all do this, but this requires that the individual member states agree or transfer a lot of their national sovereignty to the European level. That means we need then a common labor market policy. We need a common tax policy. And I think these are so, and before you do this, I think you should ask the people whether the people want it. Because what you cannot do is, on the one hand, to create a kind of transfer mechanism on a European level, and then the centralized entity, the European Union, also needs the power to influence the way the individual countries spend the money. And this requires a common mutualization or a common labor market policy, a common economic policy, a common tax policy. And we can do this, yeah? The question only is if the majority of the people, if this is clear for the majority of the people, and then we should ask the people, and then you can create something like, in the end, the United States of Europe. Yeah, this is the vision in the end, but we need the bail-in from the people. This is the only point. In order to prevent the rise of populists on the left, on the right, etc., yeah. I think we should be very clear that the 500 billion fund, the recovery fund, raises a lot of questions about the future, about the nature of the European Union. Does it need a constitution, etc., etc., etc.?
Yeah, very good points, Jörg, that it indeed goes into governance and do people feel represented in Europe, and a whole new set of issues that are definitely not easy. Angel, I could see you dying to jump in. Now it's your chance.
No, I just want to, I think we have to stop talking about transfers, because otherwise this union is never going to work if we continue to talk about transfers, right? That's what I think this discussion has to be put in the sense of what is the right policy mix. Now, these funds, let's see how this recovery fund is organized and everything else. But at least one way I can see it is that each country comes to the table with projects. Those projects are agreed on by, the Eurogroup, the Commission, whoever it is, the deciding power, and then that is the sovereignty in some sense that has been released, right? You have to get the agreement on those projects. Those projects, as I said, they will have positive externalities for everybody. So there is no transfer. If the European Union or if the Euro area thrives and grows better, then Germany benefits as well. So there is no transfer. I think we have to stop talking about transfer. Transfers are cyclical. Let's not forget that at the beginning of the Euro, it was Germany that was the sick man of Europe. The transfer would have gone in that direction. Now the transfers some people call them, may go in a different direction. We have to stop talking about transfers. Either we are in all this together or we are not. And I think that's the key. I mean, there are many other ways of defining a transfer. For example, if corporate taxation is different across European countries, are some countries benefiting from a transfer if they have an advantageous corporate taxation regime? If we want to talk about transfer, there are many ways to talk about it. That's why I think we have to put that apart and think about what are the next 5 or 10 years of the European Union going to look like. And if we want to increase the stability of the European Union, we have to make sure that disparities don't increase. To me, it's as simple as that.
Mm-hmm. Perfect. Thank you, Angel. We don't have a lot of time left, so I think our discussion of the ECB will be shorter than I thought. So instead of asking you very specific questions, I would like each of you really briefly, like in 3 sentences, basically, the role of the ECB, what should we be thinking of, what's right, what's wrong, what's next? Your really brief 2 cents on the ECB. What should we be focusing on?
Well, the ECB is in a difficult situation because, you know, in 2010 it started to buy government bonds, and the risk is that this institution becomes fiscally dominated, and it's not easy for the ECB to deal with this situation. Going forward, what I really would like to wish is that the conflict between the German Constitutional Court and the ECB can be settled. I think it is easy to be settled, and I expect it to be settled because I cannot imagine a situation where the Bundesbank is no longer allowed by the German Constitutional Court to participate in the bond buying program. And I expect this kind of compromise to emerge shortly before the deadline, but I'm quite confident that we are likely to see a compromise. To end on this positive note.
Perfect. So time is really, really tight, and this being a digital event, we need to be really mindful. So I'm afraid I won't be able to let Agnes and Angel speak about the ECB, but I think the discussion on common policy that is not monetary was really worth it. So thank you all for coming today, quote unquote, and we really hope to be able to host you again soon and in person. So thank you very much, and everyone please stay connected because Philip Lane is up next, so definitely worth listening to him as always. Thank you everyone, and have a good day.